All right, welcome everybody. This is the first for the week. We have had quite an interesting couple days here. Microsoft just came out with earnings and missed on Azure cloud storage. Beat top and bottom line on revenues. What does that mean for the market? What you see here in front of you is the S&P 500, including today, which was, again, July 30th. What's tomorrow? The last day of the month. What's really crazy about this story that you see here is based on a bunch of different indicators. So first off, this is the advanced decline comparative ratio line for the S&P 500. We had a down day today, almost 0.75%, 0.6%, let's say. The Advancers 340 beat. More stocks were up than down. So that would, first off, to be down that much today tells you it was cap-weighted names. Everything else that's not moved all year is starting to come up. So that's the whole thing about broadening, right? Generally speaking, we don't see market crashes when you get new high. That's a new high reading for the year, by the way, in the advanced decline. So if you get 1 or 2 more days, and we've got the Federal Reserve with tomorrow and then unemployment report on Friday, if we end the week with a positive advanced decline, there's no telling what you'll see to the upside in the market. As long as we get more volume participation, and that's what this indicator is. It's my volume indicator. We need better volume. This is the 10-day ATR, says so right here. Average true range, 10 days. Usually speaking, markets don't go up on heightened volatility or increases in ATRs. Remember, when markets have an increase in ATR, they tend to see downtrends like they did back over in April. So we have mixed technical conditions at the very least. What do I see happening? Coming into tomorrow, first and foremost, what we talked about in our live trading room is that we had the great big sell-off in some of the, of course, semiconductors. And what led the charge was NVDA. There's a gap down here at NVIDIA. We bought some in the pre-market at around 101.58, I think it was, or 60. And there's a gap in the market that was, that starts at approximately, as you can see here on the low at 101.52. We dipped into that gap in the overnight session. And then what we had was AMD came out with the reports, and AMD was up, I think, 4% or so. So I think the semiconductors have probably taken 95%, if not a temporary bottom. And, we're going to get a little bit of back and forth. I'm not saying it's the green light to go all in on NVIDIA right this minute, but if we can get improved intraday volume readings, and that's what this one indicator at the bottom is. This is again, 5-minute, 15, and 60. What I would like to see, if the market is truly going to turn around, base out, we want to see the short-term volume start to give me positive readings. We want the relative strength. This is the PMC reading. You get this on Thinkorswim, Wealth Charts, a lot of different, and again, TradeStation. So what we want to see, if there is a bottom coming into the market, a tradable low that is, we want to see the short-term relative strength improve, which it's dark red, it needs to be fuchsia, and we need to see the volume turn positive, which is green bars, not red. So we might be closer. We're obviously, in my humble opinion, closer. I don't know if we're going to get that chance tomorrow with the Fed or not. So let's take a look at some of the scan results from today, and I'll tell you what might be a promising situation for tomorrow. First off, take a look at everything that you see here. What is a strong concentration of names? Yeah, you got a couple capital goods. Curtis Wright, I believe, is more in the aerospace defense. You got not enough energy for me to get excited. Chevron did form a daily, what we call a high close doji pattern. I would feel more comfortable if it was more broad based, or a couple more days of increased buy signals, meaning Chevron is not the only one that gives a buy signal. I'd like to see maybe Hess and maybe Exxon and maybe ConocoPhillips, and they're all kind of mixed at this point. As we get into the financials, there's a couple, as you see. That's pretty much everything. Whether it's United Healthcare, UNH had a buy signal today. And trend consolidation, and this could be a powerful breakout that might extend a little bit higher. But another thing is, all of these are financial. So this has got to tell you that the market is setting up for a Jay Powell dovish talk. In other words, I think Jay Powell is going to set the world up for a September rate cut. They're not going to do it in July. Just the market's not ready for it. So I think they can prepare themselves. Remember, they still have the unemployment report. They got the Jackson Hole, Wyoming event going on in August. And then they come into September, and they're probably more prone and prepared for that rate cut. But the market's ahead of itself, and the market's anticipating. So Capital One, look at this pattern. It looks like a base, a rally, and then it kind of has that dip and then the rip, right? The dump before a pump. I want you to notice that pattern because it exists in a lot of stocks recently. So what I find is that once you get like this thing washes itself out, there's a stock here called Robert Half International. I mean, this was like uncalled for, unduly called for of a massive break to the downside, a dump, and then before the pump. Now, this has got some pretty interesting longer-term intra-week volume. So if the book has been wiped out, if everyone had stops underneath the market here on Robert Half International and they wiped out the stops, now it's ready to take off without everybody. You have a more defined risk situation here, and how well could this, or what would be the upside potential? Minimum 82, what would be your risk? Risk isn't much below 57. So it's a pretty awesome risk-reward ratio in that regards, based on not anything of inside trader information, just the way the market dumped and pumped and wiped the book out. There's a lot of that going on. Now, we have tons of earnings out this week, and I think that's what most people would like to hear more about. Starting with on Wednesday, there's Carvana, there's eBay, but Qualcomm is on Wednesday after the close. But the real money and the real movers and shakers want to see stuff like, I don't know, this was a company, you may have had one of their burgers or hamburgers. It's called Shake Shack. Yesterday left us with a high close doji. Today had some follow through, but they come out with their earnings on Thursday after the bell. DoorDash, DASH, another one kind of in the restaurant business, right? But here's what I'm seeing. First off, I think we're going to have a decent opportunity. We have Amazon coming out. Now, Microsoft missed on one front. AMD kind of beat a little bit. AMD, it's only up about 3% in the after-hours market. Amazon is a stock that not a lot of people have really gotten behind this year on the AI front. Personally, I think that the market on the mega caps, the correction might not be over there. I think valuation's a problem. The price to earning ratio on Amazon is 51 times forward. The 5-year high, you can see it here, is 80. Even though it's at its 5-year low, this is not a new company. This has been around a long time. They've just reinvented themselves multiple times. Depending on the Federal Reserve, I think that Amazon is going to probably stay between this. If it does have a dump, it's going to take out the swing low, the May 31st swing low, which is 173, which is not far from, $8 move from today's close. I would be more inclined to be a buyer down there if we see that. Now, what you can do is look for what we've done in our own live trading room, and we did this with NVIDIA. We bought puts a week ago, and we were on the bearish side of NVIDIA. Now, when I take a look at NVIDIA, what we can do is instead of taking a profit on your puts, if the market pulls into a level like it did tonight, you can gamma scalp the trade, buying the stock in the extended hours against your put options. And so I think Amazon's going to present that same type of environment. There might be better action in the extended hours when Amazon comes out with earnings than maybe during the day. The other one that's important, and I hope that information found you well. The other one that's obviously everyone's looking forward to hearing about is Apple. And while I don't pretend to be an expert on every metric and measurement of what the rest of insiders in the street is looking for on Apple, we definitely would sit there and say, is their valuation at 33 or 34 times earnings, is that also a cheap one? It's actually near the high of the last 5 years. So can they cite that sales are doing well in China? I don't know what the metrics are, but we here, at least myself, here I believe that if we get back into a better value around the 206 pivot support. I'd be more interested in being a buyer down there on Apple. 218 is just, there's too much time between now and the new launch and the iPhone for me to really get excited about Apple and their earnings for any sustainable trend. So I'm more of a trader of Apple. I'll buy a sizable dip to scalp on the after hours earnings when we get those results Thursday. As far as anything else is concerned that might look a little bit better, in the technology field, very few stocks gave me substantial buy signals. And the last time we had talked here, or maybe you heard me, we did a trade a week ago with a tight stop on target. It did stop us out. It hasn't gone anywhere since. So I am interested in getting back in, but I'm not going to get in until I get, again, the relative strength's doing pretty well. The volume eked lower, and that kind of helped not do well for us and stopped us out. It was a small risk. But I'm still interested. If you look here between the shoulder head and the potential shoulder, maybe it needs a little bit more time to fill in. But target back to school sales, and if the Fed, by the way, is more dovish, then that leads a little bit of relief rally for consumers and credit card debt, and perhaps a company like Target will benefit from that immensely. And no one's talking about it because they're all talking about chips and semiconductors and technology and AI, of course. But the other one that we gave out the other day, just as a follow-up, was in fact Foot Locker. And Foot Locker's up about 10% since our last video. It had a high closed doji, improved relative strength. The volume was right there, and that's what I'm looking for when I get into a trade. And so now what would I suggest? The volume is still pretty decent. The relative strength is outperforming. My upside target, if we get into filling in that gap, which is around 31.5 or so, absolutely take off the position. In the meantime, if you did take this trade, trail your stop, and your stop should be trailed well above your break even. And I think 26.57 will do it for you. So that's what we have for tonight. A lot of different new, there were a lot more buy signals in smaller cap names. And here's a daily high close doji listing. This is unfiltered buys. So I'm just going to go rip all the way down the list. 370 new buy signals were generated today. How many sell signals were generated today? Today being Tuesday, July 30th. Again, we had 261. Look where all of the sell signals came from. The majority are all in smaller cap and maybe semiconductors like Tower Semi in technology names. That's where we got the bulk of selling. So that's got to tell you there's a rotation out of tech a little bit and into smaller cap, which, by the way, has been one of our plays that we were talking about with more upside potential out of the Russell. So the Russell, as long as we keep maintaining higher low, higher highs on a weekly, and that's what this is, a weekly chart on the Russell, we still have some pretty decent potential for an upside move. And my guess is it wants to go visit that high that we traded at in November of 21. This is going to take time, so you'll have a chance. And I think the 222, 235 wide bull call spreads, the 225 strike long, sell the 235s against it in the September option expiration would be a good trade. Risk half your premium and get out of half on a double. That's the general rules. That's today's report, and I'll obviously we're back in action here. The weekend is over, and I'll update you on any new developments on the scans that we run for tomorrow. Have a great trading day tomorrow. Good luck, and remember, Jay Powell's not what he does at the announcement at 2 that's as important as the press conference at 2:30. We'll see you tomorrow afternoon for a quick review.